It was May 6, 2010. At 2:32 p.m., the New York Stock Exchange, the center of global capitalism, began to unravel. Billions of dollars in trades were happening every second, a blur of numbers flashing across screens, invisible hands buying and selling, millions of algorithms battling each other in microseconds. But deep inside that storm, hidden behind an anonymous account number and a laptop in a small London suburb, a 19-year-old day trader named Navinder Singh Sarao was about to trigger one of the most terrifying financial events in modern history, a collapse so sudden and violent that it became known simply as the flash crash. He wasn't a Wall Street titan or a billionaire hedge fund manager. He lived with his parents, traded from his bedroom, and ate the same lunch every day, beans on toast. His setup was nothing glamorous: a few monitors, a noisy keyboard, and an internet connection fast enough to reach Chicago servers. But Navinder had something few others did: an obsession. While Wall Street poured billions into algorithmic trading systems, Navinder studied the markets manually, memorizing every pattern, every flicker of greed, every hesitation in the price feed. He knew when the big players were bluffing and when the system was lying. He had one belief: the markets were rigged. Not by people, but by machines. High-frequency trading algorithms were dominating the battlefield, buying and selling thousands of times a second, making fortunes out of microscopic price movements before humans could even blink. Navinder didn't hate the game. He just wanted to beat it. In late 2009, he began developing his own weapon, a custom trading algorithm that would later be described by investigators as genius-level manipulation. It was simple in concept but devastating in execution. It worked by placing huge sell orders he never intended to execute, then canceling them in fractions of a second. The orders tricked other algorithms into thinking the market was about to crash. Prices dropped. And as they did, Navinder quietly bought up cheap contracts, waited for the panic to settle, then sold them for profit when prices rebounded. It was called spoofing, and at first, it was almost invisible. For months, Navinder used this technique to make millions. He didn't live lavishly. No yachts, no mansions, no luxury cars. His bank account swelled quietly while the world's most advanced trading systems unknowingly danced to his commands. He was the ghost in the code, the invisible hand behind a trillion-dollar market. And nobody saw it coming. Until 2:32 p.m. on that Thursday. The markets were calm that morning, steady, predictable. But beneath the surface, something was off. Liquidity, the lifeblood of the market, began to vanish. Orders were appearing and disappearing faster than usual. Then, out of nowhere, a massive wave of sell orders hit the S&P futures market in Chicago. Billions of dollars in contracts flooded the system in seconds. Traders thought it was panic, maybe a terror attack, maybe a system glitch. Within minutes, the Dow Jones plunged nearly 1,000 points, a 10% drop. It was the largest one-day fall in history. Blue-chip stocks like Procter & Gamble dropped from $60 to a single-cent Apple's value evaporated. Accenture's stock price briefly hit zero. For 20 minutes, the global economy spiraled into chaos. CNBC anchors stared in disbelief. Traders screamed across the trading floor. Algorithms raced each other into oblivion, selling at lightning speed, feeding off panic they themselves had created. And in a small London suburb, Navinder sat in his chair, staring at his screens, watching the market burn. When it was over, $1 trillion in market value had vanished, and then reappeared in just 36 minutes. No one could explain what had happened. The official term became the flash crash. Theories spread everywhere: a fat finger error, a rogue algorithm, a cyber attack. But the truth was more unbelievable. It wasn't a machine that started it. It was a 19-year-old kid with a laptop. For years, the mystery lingered. Investigators scoured millions of data points, searching for the source of the instability. And there, buried deep in the code logs of Chicago's Futures Exchange, they found it: a trail of fake orders placed by one user, NAV_Sarao_futures. The system had flagged him years before for unusual behavior. But his spoofing technique was so intricate, so human in its timing, that it slipped past every automated compliance system. When US regulators finally pieced it together, they were stunned. Between 2010 and 2014, Navinder had made over $40 million from his bedroom, manipulating the world's most sophisticated financial market without ever leaving home. They called him the Hound of Hounslow. But Navinder wasn't living the life of a criminal mastermind. By the time the FBI came for him in 2015, he was still living with his parents, still driving the same car, still eating the same cheap meals. When agents arrived at his door, He reportedly asked if they could come back later because he was in the middle of trading. His arrest sent shockwaves through the financial world. How could one man cause such destruction? The truth was both simple and terrifying. He didn't. The system did. Navinder's spoofing didn't break the market. It exposed it. His fake orders were just the spark. The algorithms that followed, the ones built by billion-dollar firms, were the fuel. In court, his lawyers argued he was a scapegoat, that his actions were a drop in the ocean of a system already primed to collapse. But the US Justice Department saw something different: intent. They charged him with wire fraud, commodities manipulation, and market spoofing, crimes that could have put him behind bars for decades. Navinder pleaded guilty in 2016, admitting to his role in the flash crash. But his sentencing dragged on for years, delayed by questions about his mental health and cooperation with investigators. Behind the headlines, he was quietly helping the FBI understand how the modern market worked, how milliseconds could decide the fate of nations, and how one clever mind could exploit it all. In January 2020, the verdict came. The man who nearly crashed the stock market walked free. No prison time, just a fine and a lifetime ban from trading. Today, the flash crash remains one of the strangest, most revealing events in financial history. $1 trillion disappeared in less than an hour. The system that was supposed to be the pinnacle of human progress, precise, efficient, untouchable, had been outsmarted by a teenager. Some say it was luck. Others call it brilliance. But in the end, the story of Navinder Sarao is something deeper, a glimpse into the invisible battlefield where code, greed, and chaos collide. And it all started in a quiet bedroom on an ordinary day when a 19-year-old kid decided to take on the machines and almost broke the entire world trying to win.